Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks, episode number 177. Now, today we're going to take a look at the overall market. I'm going to share with you some insights on why this could be an early bear market and kind of a precursor to future selling pressure. We won't talk too much about the news. We'll talk a little bit more about the charts today. That's what I have in store. So let's get into it. So, taking a look overall at a couple of quick things that happened is basically we had Trump tweeting about the Amazon. And when you look at this, how it sent the stock lower, it's not just because of his tweet that sent the stock lower. Overall, the market is more volatile. And with more volatility, you have this whipsaw action. And as I'll show you here in a second, Amazon was actually poised to break down anyway. But with the tweet, it added a little bit of fuel to that as well. As we start looking also at some stock market big boys like the Nvidia, Tesla, Amazon, Facebook, all these also FANG stocks or some of the big boys are also struggling. So I want to dig deeper into the charts and share with you some insight on why this could be an early potential bear market. First off, you have to remember and understand that when you're in a bear market, especially a big bear market, you're basically having a lot of volatility and a lot of whipsaw action. That means you get massive moves to the downside. So let's take a look here. We've had massive moves to the downside recently. Like take a look at here was a kind of a starting point. We had these big bars. This was pretty serious. Now, normally, if it was just a standard pullback, this would have kind of isolated and slowly we would have been kind of climbing and reducing the volatility. The issue and the problem here is we're starting to create lower highs here. And in addition, the volatility keeps staying and sticking. So as you start looking at, let's say here, these bigger bars again, especially just the recent ones, like you take a look here, we're down, let's say 60, 70 points on the S&P, and then we bounced 60, 70 points on the S&P. Then we're down again 60, 70 points on the S&P. That's called volatility. And this is how bear markets really start. And what they're doing is they're testing these key trigger areas of emotion. Because basically what happens is people are getting into it hoping, oh, well, it's over, time to get in, you know, thinking it's a one-day event. But if you look at this overall upward trend line, we were holding it for a while, right? We're holding it right here. And then what happened is we broke it right there. We broke it actually on a test earlier in February when we had that breakdown. But now we broke it again, testing it, and now when we tried to get back into it, we're rejecting it. We can't get back above it. So it's called like basically inverted, or not an inverted, but you have a new trend line that's created that's creating a resistance on that support line, right? So we're reflecting the resistance right at where the support was. So if you start looking at it kind of like a 3-day, 2-day, you could see where we got right there and rejected it. So does that mean we can't go up? Like look right now, we're up 31 points today. Basically, think of it like a Friday because we do have Good Friday tomorrow. By the way, happy holidays. But if this comes in here, you know, in 1 or 2 days, that's up 70, 80 points again. And then we could reject it without a problem, and this could sell off. So when you have these moments of euphoria of, hey, things are great again, that's really where the bear market lies. And it's a lot of emotions that play. And I just want to show you how dangerous this is, because when you look at 2016, where we were with the prices, we're now testing this trend line. This angle of elevation is being tested, and it's starting to fail. As this fails in a clear way, you're going to have mom and pops also start to sell the early guys. Then you'll have the late bloomers come. And this thing could get down, you know, who knows where it goes. I mean, I don't know. It could go to the 2200, 2100. It could go, if you start looking at things really, we could get back into 2008, 2009 highs, 1600, and test those levels. So who knows where it's going to go. But what I'm showing you here is that we're failing the upward trending support line that's been holding for a long time. It's testing it, it's breaking below it, and now it's trying to get above it, but it's not doing it in a very strong or good way. So overall, the negativity or the momentum is down or negative. So that's one thing you have to understand. The next thing is you're looking at this 200-day. We're testing this 200-day. If we break below that, and you can see it's pushing like a jackhammer, right? It's hammering, boom, 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 jackhammering down on this 200-day. And if we break through it, we break below it, you're going to go down. It's that simple. So like a roof, hammering down on a roof, breaks through it, that's it. It's over. You're going to have a hole in your roof. You're going to have water. So that's what's going on right here. Is you're watching that level. If it breaks below it, you could have further trouble just looking at that angle of elevation. Now, you combine this with looking at the stocks, right? So if we start looking at overall the stocks, look at Amazon right here. We have this upward trending line. Look how accelerated that move is. And the stock is breaking down, right? So you take a look. Here's our upward channel trend line. You know, you could draw it however you want. You could draw one even right here. No, you know, because that's where the most recent one is. I drew the slow one and it still broke below it. And it's going to try to probably test it. It's going to try to go up, but it'll more than likely reject it. So this is why even before Trump tweeted about it, it was already breaking that trend line and rolling over. When you look at Facebook, okay, here's our Facebook trend line. Here's what it was doing. We had that line of resistance. Here was our support line of resistance, and then it started to roll over. Well, now we have this long dated, take a look, upward trending support line, and that's where your key is now. And if this breaks, because you'll probably get a bounce, you'll probably get a nice bounce for a week or two, you'll probably get a good bounce, and then if it rolls over, again, you're in big trouble. So if all these stocks, Amazon, Facebook, call it Tesla, look at this one. Okay, here's our key level of support and resistance, right? You could say the 300 level. You could also kind of look at this level right here because of these critical points, and it's now back under it. And if this, again, all of these are going together, this one is breaking down, Facebook's breaking down, Amazon's breaking down. Look, and here, NVIDIA, look at this one. It's testing, it's holding today, right? But look, it already broke it. Now, it didn't hold up below it, but it's hammering through. So right now we got the value buyers thinking, stepping in, hoping, boom. But if that breaks through again, it just accelerates the energy. And how low can this go? Well, 120, no problem. Cut this in half, right? 230 between the breakout, call it from 40, pull back 100. So let's say about 120. That puts you right there. So how did I do this? Look at the swing breakout point, 40. We're at around 240 was the high. 240 minus 40 is 200. Cut it in half. So 50% pullback, because that's a standard pullback. So 200 minus, 50% would put you right around 100 points lower. So that would be 240, minus 100 points, give you about 120, around that level, which is right around that support resistance level. Could even get into that 100, so it's right around that range. Doesn't do it perfect. If you want to do Fibonacci, there you go. Here's a Fibonacci sequence. Right here, breakout right there. 50% will give you about 150. You could say 61.8 puts you right there at the 120. So you could see how these lines line up fairly nicely. So these are some key points to really watch on pullbacks. Anyways, just gives you a little perspective. So what I'm saying here is that when you look at all these big companies, even PepsiCo here, looking at this company also breaking down right here. Look at this upward trending support line, trying to break down. If this breaks, again, look at the breakout point, take about 50% of that, and how far can you go, right? So let's take a look here, from here to here, lows. You can probably get to 61.8 would put you right here at these support and resistance lines. It's funny how that works out, and 50% right there. 85, call it, 75 level. And if that goes, along with all these stocks starting to go together, if they go, there could be some serious trouble. Shopify here as well. Take a look. Big trouble. So you can see we got into the 150s, massive pullback, volume accelerating, trying to hold this 120 level now. But if that breaks, well, it doesn't mean you can't get back into the 100. Okay, so easily could get back into the 100. If that goes, you could get into the 80s, no problem. If that 80 goes, you could get into the 40s and 50s. Nothing says you can't. Look at McDonald's, also rejecting. It rolled over, right? So here was kind of our upward trend line. We broke it, we rolled over, We're rejecting at this 160 level. If that comes back, you could get into the 130. So imagine all these stocks start moving kind of all down together. They start breaking. I mean, I understand we're getting a pop here today. I get it. And I get it. We had some massive pops right there. In shorter term, we are oversold. But what is shorter term? Could be for a week or two. So yeah, if you get 1 to 2 weeks of positive gains and the headlines say, hey, we're back. This is great market. I'm bull on the market. And then all of a sudden you roll back over, well, stocks then will be in further trouble. So all that's doing is you need to be very careful setting up with the rise in bearish volume that's starting to pick up. If that continues to accelerate, if you get more negative sentiment that comes in, if these lines, they have already been penetrated, they've already been broken. If they stay broken and they continue to accelerate and more bears keep stepping up, because what happens is the big money managers on these big bounces, the reason why you have these big, large downdraft bars and then big updraft bars is the money managers on those big updraft bars, they're selling. They're selling to you slowly, little by little. They don't want to wear out your fuel because you're buying and you're happy about buying it, but then they're dumping it to you, slowly liquidating their position. And then again, then they dump in a big way. It goes down. People are starting to buy in, a little bit of a day trade kind of thing. That goes a little bit higher. And then again, they'll dump it. So they're slowly trying to liquidate things, as far as it's called, distribution, to the little guy. And, you know, it takes a while to do that. And then eventually it just drops. So look at Google here. Same thing, holding 1,000. But if the 1,000 breaks, you have problems at the 900. So anyways, that's what I wanted to share with you, was basically when you start looking at these stocks, and you start looking at, let's say, the NASDAQ composite, the lines are basically being penetrated, they're being broken, and it's a huge warning sign. Now, we're still holding things, especially if you look at the moving averages. We are still holding, so in theory and technically, it's still holding, but it's holding weak. It's kind of like holding on a mountain cliff with 2 or 3 fingers when you're 1,000 feet up, right? So you need to be very careful. Overall, in the long run, the market does continue higher, let's just say 50 years from now, just due to inflation. But, you know, in the shorter term, even for the lifespan that I'm alive, well, you could have a 2-3 year bear market. Who knows? Typically, they only last about 1 to 2 years, but you can see right here, the pullback here was about 1.5. The pullback here was also about 2.5, 3 years. But at that point, you're basically taking out 50% of the gains. So 50% of the gains from, well, if we go from here to here, 50% could put you around 2,300. But if you're doing it from the breakout low, I mean, 50% puts you right around 17, 18, right here, 1,800, which is the lows over there in 2016. Or if you go 61.8, 60% pullback, a nasty pullback, puts you right at the highs of 2000s and the 2007 crisis. So it's really interesting how that works out. It's history, basic charts, basic technicals, something for you to think about, and just be careful with your positions. Trade lighter. When there's higher volatility, you want to be lighter. You want to go wider, less shares, be more cautious, take your profits earlier. Just be nimble where you're at in the marketplace, and it'll keep you out of trouble and allow you to survive another day, another week, another year in this business. Otherwise, if you're trading 99% of your capital and you lose a bunch of it, well, you're not going to have a lot of money left, especially if you're losing a lot of your money right here. I mean, the market is a long-term thing, right? So you want to be able to be trading for quite a long period. So if you were trading here or here or here, there are different conditions than we are here. So if the conditions are not set up for you, just be patient. Allow things to set up, cool down, might take 3 to 6 months, and then get back into it. There's nothing wrong with that. So anyways, I want to thank you so much for joining me today. If you want to go ahead and join the newsletter, go ahead, click the button over here, subscribe on YouTube, and be sure to check out some of the other videos. I have some great things planned. We have the options course wrapping up here in the next month, so I have a couple of them coming out. And then we'll also be doing a penny stock introduction course that'll also be coming out in the future. So keep your eyes peeled, make sure to subscribe so you can get the announcements for when those are released. Thanks for joining me. Enjoy your weekend ahead. And remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.